You're listening to the audio portion of Workshop Wednesdays. Workshop Wednesdays is a free live discussion about topics affecting accountants, bookkeepers, and business owners. You can join the ABO group in Facebook to participate live Wednesdays at 10 a.m. Pacific Time. Just search for ABBO in Facebook. This podcast is brought to you by Schoolofbookkeeping.com, where you will learn, grow, and build a thriving bookkeeping practice. We have hundreds of lessons with almost every aspect of the industry. Start your free month today at Schoolofbookkeeping.com.
Well, welcome to another Workshop Wednesdays, casual conversations for serious workflow, brought to you by Schoolofbookkeeping.com, where you can keep learning QuickBooks your way. How are you, Rachel?
It's April 15th.
That's right. It is a pants optional day at the home office during a day like today. Do you deal with taxes, or do your clients dealing with taxes?
Because I acquired Core Financial, we do tax. I personally don't, but we have been finishing up financials for taxes. It has been totally crazy.
Yeah, I think that's actually a really, like, when you are in the accountant space and you do taxes. I met somebody when it was QuickBooks Connect, that they were an enrolled agent and they would only do taxes, business taxes, for clients that they did the bookkeeping for.
Yeah. I mean, honestly, to be able to have both of those, it's really incredible. And I understand why some EAs and CPAs and other tax preparation specialists won't do it for clients that don't do for if they're not doing their books, because I would never trust those books to be accurate if they were just giving them to me, especially if they were DIYing. I don't know.
Yeah, because there's a lot of back and forth and questions to clarify why did this get categorized as this, and
yeah. And you know what? It's not even necessarily that. It's why are these starting amounts different than what the ending amount of what you gave me last year? And usually we've had that situation, you and I, and no fault of yours or mine.
Where'd that come from?
Yeah.
Yeah, I think it's for those that do taxes, that just makes a whole lot more streamlined process.
Yeah.
But of course, you have to be able to have the bandwidth to be able to handle that, and then the team to support that.
Yeah. And that's hard, putting together the team like that. It's not easy.
Yeah, I bet. So part of doing your taxes is revenue recognition and depreciation. Those are the year-end things that a lot of people will do in preparation of doing their taxes. And we had done a couple workshops in the past about the revenue recognition feature and the fixed asset depreciation feature. And I think we had done some other workshop where I was going to show it, and of course they moved it. So I thought it would be a good idea to revisit this topic, because it's always one of those things that when there are changes to things, either there's one of two things is going to happen. You're either going to give up and forget looking for it, or you're going to get a little frustrated with trying to figure out where things are and maybe not even end up using it at all, or just spoiling the experience, I guess, is the nicest way to say that. So have you ever used the depreciation calculator for fixed assets in QuickBooks for any of your clients, or the revenue recognition?
Yeah. It works really well. And the reason that it's helpful to use is because you when you're doing true accrual accounting, that's not something you just want to throw in at the end of the year. You want to look at that as it affects your bottom line throughout the year. So that's something that I would want included in my regular month-end things to check for.
Yeah. So let me go ahead and share my screen. Now, what used to happen, and part of the reason for revenue recognition quandaries is that initially you would have to set up these items. Part of the setup was on the products and services, and another part was in settings. So I think what happened is they decided or determined that it's an easier process to have it all in one place. That they didn't announce where that one place was going to be. So what you used to have to do is you used to have to edit the service-based items, and of course I chose a non-inventory item. The service-based items, and there was an option here on the right side to mark all the schedules and check off that you do revenue recognition for that service-based item. But now it's not here, and I think this is where I got confused when I was looking for it.
Yeah, where the heck is it now?
Live on a workshop. They took an opportunity to move everything when they were moving everything. So with the new user interface, it's now under all apps accounting.
Oh, okay. Yeah.
And there they are, the revenue recognition and the fixed assets. Right?
Cool.
Let's pop into.
You can bookmark there, and so then it's in your bookmarks.
Exactly. And again, you'll have it all in one place. And so we have up here at the top where you can see the reports of the revenue recognition. Of course, I don't have any set up. So let's just double check for oh, I do. Okay. I did have it set up initially. So it does break out those revenue recognition options. And I did put in the chat the prior workshops that we had done on these two topics. So we're not going to go into much great detail of what it is and how it works, because you can watch those, and we have courses and lessons on that inside of School of Bookkeeping. Anyway, my main concern for this workshop is to make sure that people are updated as to where they go to do all this stuff. So let's go back to our revenue recognition. So you have reports up at the top. You've got settings. And so this allows you now to create templates for your revenue recognition. So you can manage the templates here. It gives you 2 by default. So you've got prorated by days at 12 months and even across periods at 12 months. Now,
oh, very cool.
What is the standard? Are these the 2 standards from someone who's taking their master's in accounting?
Yeah, well, the across periods is the most likely one. If you can, I like that there's that prorated one. If anybody had, that sounds like somebody would use that if they had a specific, I don't know, situation maybe in their business. But yeah,
like
even across 12 months is pretty standard.
If they have an annual subscription, like an annual thing that they're charging for, and they have they want to recognize the revenue on the day that it starts and the day that it ends, and prorate it by those days.
Yeah, something like that. Yeah.
That I can see that being an option. So let's see what options we have in the templates, because this was something that is relatively new to this whole process, right? So you've got a name to call it. So we're going to call it the test workshop template. And the revenue recognition settings, where we have the straight line evenly across periods, straight line prorated by days. So you have that choice there, which you can choose across periods. So now you have what frequency is this recognition? Is it monthly, quarterly, or annually? And then So let's just choose quarterly, and then you have the reconciliation period in quarters based off of what you choose there. How long is that? Are you going to be recognizing how many periods? So
4, I guess.
this would be 4 if it's an annual that you're recognizing in 4.
Yeah.
Or if you have something that's multiple years and you want
Oh,
to
I see. Yeah.
recognize
Yeah.
each year, then you're just going to be putting in
Yeah.
that sort of thing. So now I've got a new template that I can add and continue to do that. And you can make them, let's see, what do we have under actions? We have to duplicate, or inactivate, or we can view it and edit it. And then the next thing that you have to do is you have to tell QuickBooks what items this is subject to. So here we have an annual subscription, which is a service-based item that I have on my list, and I have associated this template even across periods. And the income account is grayed out, right? Because that's being pulled from the item itself.
Yeah.
And then, but the liability account is something that you can specify per item, right? So maybe you have a specific account for your annual subscriptions that you want to have that go as the liability account for the deferred revenue, or you can change that. And then you have this option here to assign, what did it say? I clicked on it. Assign the template to products and services. So I have multiple services, but not all of them are listed here. So if I wanted to add another revenue recognition schedule to a product or service, so now I have the ability to add more, right? So I'm just going to choose this hours because it's a service item. And then I have my templates to choose from, and then what liability account that going to go to. That's the.
And it has to be a service item, or can it be non-inventory?
Yeah. It has to be a service item.
Okay.
So if I go back and I look at these products or services, I think the first one on my list was a non-inventory part, and it's not here, right? So these are only the items that are service-based items, right? So if you're not seeing an item in here, then just check and make sure that it's a service item and not a non-inventory part. Because in reality, non-inventory parts and service type items to QuickBooks are no different, right? Because you can do exactly the same thing with the exception of revenue recognition across both of those items. You can mark that there's expenses associated with those service items or non-inventory parts. You can, all of the other fields, there's no additional functionality tied to that other than this, what we're talking about here. So service and non-inventory parts in the grand scheme of things are identical.
Mm-hmm.
Then you just, now that you've had those items set up, now back in here, you have your settings, and then you can create a new schedule with an invoice or a sales receipt. So if I choose an invoice, now one thing that is required for those items, so I'm going to put annual subscription here on the thing here, and it adds this column for revenue recognition hidden, right? So we're just going to say it's $1,200. I'm going to put a customer on here. Keep the rates. All right, we're going to save it. Now, when you try to save a revenue recognition item that does not have a service date, you're going to get this message up here at the top, which is a little bigger here. So you need to have a service date for the revenue recognition line item. So you turn on the service date from the customization under manage, and then come back here and enter the date. So we go up here under manage. This is now too small or too big.
That must be the date that it pulls from is the service date.
Exactly. So you add that service date under your customization options and enter that date in here because it's now today, because it needs to know what day to start calculating. It's not the transaction date, because that could be certainly different than the service date that things actually started occurring. So we're going to save and close. All right. Now, once the end of the month happens, then it's going to make those entries for you, right? So it's going to take that $1,200 and put it to deferred revenue. And then at the end of the month, it will start to make general journal entries to move it prorated, however, whatever frequency is involved here, and then start to recognize the revenue, as the name implies.
And one reason that, and I'll just say one reason that you want to do this is like your product name is annual subscription. So like if they're selling annual subscriptions, which we buy all the time, right? I bought an annual subscription to Zoom or something like that. But I buy it on March 12th. They're getting the cash on that day. But let's say they sell all of their annual subscriptions on that one day a year. And so if they're not spreading out that revenue throughout the whole year, it looks like they're only really earning and are profitable on that one day. And that's not what you want, because if they're trying to get a loan or report their profits to somebody higher up or something like that, or a bank, it doesn't look like they're profitable throughout the year. So we want to make sure that we're spreading that out evenly. If they sell a subscription of $7.99 on March 12th, then we want to spread that out over the next 12 months.
And that's
$7.99 divided by 12.
That's fairly common in the software as a service industry, is that they'll give two options. They'll give you a monthly option, and then they'll give you an annual option. And usually there's a price break when you choose the annual, which then lowers the monthly. And, don't get me started on how they advertise those things on their pricing pages.
I know. Only prepay a whole year right now. And I had a client that was a sports team, and they took all of their registrations at one point in the year, and they needed to spread that out throughout the whole rest of the year. So it's very common.
Yeah. Now, in your schooling, do you have a class or discussion about SOX compliance? And I kept hearing this terminology when I was working at Intuit. I'm like, what do SOX have to do with compliance? You're matching them up. What is SOX compliance?
Yeah, we have a class specifically for that I haven't taken yet, but so as it pertains to that rule, we dive in deeper into that a little bit further along, but desarbanes the fundamentals of revenue recognition for sure. But it's really,
it's not SOX that you wear. It's
Sarbanes-Oxley. Yeah. So revenue recognition is really governed by GAAP and the FASB, which dictates what's under GAAP. Certain industries might have, you need to adhere to SOX, but really it's GAAP compliant is where revenue recognition lives.
Yeah, because when I worked at Intuit, of course, with desktop would come out typically in September, and then they would sell a whole bunch of new subscriptions at the last calendar quarter of the year, which was not their fiscal quarter. So it ended up being very difficult to have those cash windfalls at that end of the quarter to say at a second or third quarter, which was typically a lower reporting for cash, it would be very difficult for them to say, oh, this is why, they have to explain
Yeah,
cash is lower because we sold all our subscriptions last quarter.
definitely. And that really becomes a bigger issue when it's a publicly traded company, for sure.
Yeah. And every time that we tried to do something with subscriptions, they would be like, we can't do that because of SOX compliance,
Mm,
things like that.
yeah.
So that is the nature of the revenue recognition inside of QuickBooks Advanced. And then the other option is the fixed assets, which again is under the all apps and
Accounting.
fixed assets. Got to sneak up on it, but similar type of situation is that you have a dashboard
Mhm.
for all of that. And to my knowledge, that is the only way to get to these places. I was trying to look for some place under the gear or anything like that. I could not find any other place to get.
Well, what about if you search it in Right Tool?
I'm sure you could in Right Tool, but that's not.
Yeah.
So fixed.
It's not really a
Asset report, QBO Advanced.
And just FYI, like before this was available in QBO, was this in desktop?
It was desktop at Enterprise.
Oh, Enterprise. Okay.
Enterprise and Accountant Edition.
Okay.
It was actually a separate, so a little Intuit trivia here. It was a separate program that was downloaded and installed automatically when you purchase those various SKUs of QuickBooks, but it was called Fixed Asset Manager.
Okay.
And you could access it from within the QuickBooks and it would open it up, but it would actually bring up a totally separate, different application where you would put in the assets, the date that it was started, and the depreciation method.
Mhm.
And then there you calculated the depreciation and it would push
Yeah.
those journal entries back into QuickBooks.
But you could use other methods of depreciation like double declining or whatnot. Because I think in this you only have straight line.
Yeah, let's see what we.
And by the way that we're taught is in Excel. So you could always still just do it in Excel and then just create a recurring journal entry. But the point of using this is that then you don't need to do that. You can just do it in here. You can put your date of purchase and your useful life and salvage value and the whole 9 yards and put it in here, and this is where you keep it.
Exactly. So you're able to,
which I like, and I don't have all these spreadsheets all over the place.
Right. So you can create a single asset, which essentially will have the name, description, class, and location, whether or not it's depreciable or not. If it's non-depreciable, then all those things get grayed out. But if it's depreciable, then you would put in the purchase price, the purchase date, the depreciation start date, and then the method, which is
it does give you. You have 3 different methods. Wow.
Yeah.
But this is only in advanced.
This is only in advanced. So you have straight line, double declining, and 150 accelerated.
I feel like they added that because I remember a question on the advanced exam.
Yeah.
Of it only being straight line.
I know it's always been 3. I don't know which 3 it's been.
I'm totally wrong. I guess then it always has been 3. Maybe I was hallucinating. I always thought.
Or the question was, which one of these is not? And it was 4.
Probably.
Something like that.
People that write those questions.
I remember a QB Power Hour, which you were on yesterday, which was great.
Yeah.
See you twice in 1 week. But Michelle Long had mentioned something about it doesn't do this, that, or the other thing as far as what it doesn't do as we were talking about it.
Yeah.
But you do have straight line, double declining, and 150 accelerated. All of these are different choices based off of conversations you have with your tax accountant.
Yes. And as an accountant, you have a choice. You can pick which type of depreciation you obviously have to do what your client wants to do, but just saying, as accountants, we have that ability. We can choose. Is this the way we want to do it, or is that the way we want to do it? That's not mandated by the IRS.
Right. Now, what you can't do is switch.
No.
Once you have chosen, you cannot change, right? Like you're not supposed to, because if you're double declining to get the majority of the income or the depreciation benefit up front, you can't then change it to straight line after that.
No, you can't. And even still, this is still book depreciation, not tax depreciation. So it can get a little confusing, but for book depreciation, yes, you want to be consistent.
Yeah. And then the rest of it is just setting up your asset account, your accumulated depreciation account, and the expense account to show on the books. You can save them as drafts now, so you don't necessarily need to start posting your depreciation. You can get those assets, those fixed assets, thrown in there as drafts first, and then, or if you have multiple assets to add, you can choose the multiple assets, and then this screen comes up, allows you to fill those in.
Very cool. And you can even import CSV.
And even import. Okay, it's still my thunder. So those are the two options in there, and the same thing will occur once you have created that fixed asset and put it into start calculating. It will just create those automation journal entries on its schedule, and then you can take a look at those reports and make sure that they're doing what they need to do. If you do need to make adjustments, you can't modify a schedule once it's already in place, but you can make other journal entries to adjust the adjustment if need be. But bear in mind, because it's not going through this process, those reports that are specific for those functions are going to not have those adjustments. So bear that in mind if you do need to make some tweaks or changes for whatever reason, that those revenue recognition reports and those fixed asset depreciation schedules may not be inclusive of your manual entries in that realm. Now, like you mentioned, this is only with QuickBooks Online Advanced. That would be a pretty large price tag just to jump somebody up to.
Yeah, it can get really pricey when you can do it in spreadsheets. So I would say if you use that feature, if you've got advanced and you're using all these other things, then you also need to recognize revenue and do your depreciation. Take advantage of using those
tools.
Yeah.
And another thing that it doesn't do is expense recognition on the reverse side of things. So if you are purchasing annual subscriptions and you want to recognize the expense across that, it doesn't do that. And we had Ash from NetTracker.
Oh yeah.
He's created an application to do all of that stuff for you.
That's right.
And that doesn't need it doesn't need advanced for one.
Right.
But you can set up fixed assets, you can set up prepaid expenses, revenue recognition, all of those things that are now available only in QuickBooks Online Advanced, and then some.
Yeah.
By using a dashboard like that, and then gets you out of the Excel spreadsheet route of calculating those depreciation schedules and then entering in those transactions for your client, because you can set them up, which is nice. And I think that's what this is driving towards, of set it and forget it.
Yeah.
Not to be Ron Popeil and the infomercial of setting it and forgetting it, but
that's really sad that I understand that reference, by the way.
There you go. I can't remember. It was like a rotisserie chicken thing.
Yeah. He was like Ronco.
Yes.
Oh my gosh. Oh my gosh. But yeah, no, I do a lot of spread it out over the year, because I don't want to have a loss in 1 month. So yeah.
We just wanted to make sure that people are aware that they're still there in QuickBooks Online Advanced. They just moved, and where to access them and how to use those dashboards.
You just have to hunt around with a magnifying glass to find it. Listen to it. Yay.
I think you could actually, if you knew what you were looking for, you could use the search.
Yeah.
I'm actually just looking for fixed asset, and it's not there.
Yeah.
It does bring up help topics, so you could find it that way. But that's how you could find it if you knew what you were looking for. But that's cart before the horse type of thing. So This is all in service to our new series that we're having. We're going to start next week, all about the new user interface, because that's where the struggle occurs. Like, where did this go? So we start with something simple with the fixed assets and revenue recognition, and then next week is where we'll start on just general navigation in the new user interface, and getting things acclimated now that things have changed.
Yeah, and I've gotten better, but just don't change it again into it.
Yeah, that's a tough sell. Because they certainly operate on that. Different is good.
Yeah.
All right, so it's great to see you all. Thank you for joining us today, and we'll see you next time on the Workshop Wednesday.
And that wraps up another insightful episode of Workshop Wednesday, brought to you by Schoolofbookkeeping.com. We hope you enjoyed today's discussion and took away some valuable tips and strategies to enhance your bookkeeping practice. Remember, if you want to stay ahead in the world of bookkeeping and accounting, be sure to visit Schoolofbookkeeping.com. With a wide range of courses, resources, and expert guidance, you'll find everything you need to sharpen your skills and boost your career. Don't forget to subscribe to our podcast on your favorite platform so you never miss an episode. And if you enjoyed today's show, please take a moment to leave us a review on your podcast platform of choice. Your reviews help us reach more listeners and continue to bring you the best content every week. If you have questions or topics you'd like us to cover, reach out to us on social media or send us an email at support@schoolofbookkeeping.com. We love hearing from our listeners and are always looking for new ideas to explore. Thanks for tuning in to Workshop Wednesday. Until next time, keep learning, keep growing, and keep excelling in your bookkeeping journey. I am Dan DeLong, and we'll see you next time.